So, I mean, this is a bank that has really had a lot of problems over the last year or so. So this isn't something that's just been this week. You know, they've had scandals, they've been hit by legal problems, regulatory issues. Across the last year, the share price has been down around 85%. But then this week, there's been this very depressed mood towards banks in general following the collapse of the SVB bank in the US. And there were some comments from the Credit Suisse's biggest shareholder, which is the Saudi National Bank, who said that they weren't interested in injecting more capital into the bank if it was needed. Now, those comments coming at a time when the mood towards banks is very fragile meant that the share price took a really big hit. Investors suddenly got very panicked that maybe Credit Suisse was the next bank to go. And I mean, we saw the market start to price in expectations of a default on its bonds at around 40%. So investors became really quite worried about the future of the bank. And that's why we saw that huge sell-off.
Yeah. So did the central bank in Swiss, is the Swiss central bank have no choice but to come out and back it?
I think that's right. You know, there really wasn't too much that they could do here. And we saw in the US as well, you know, that quick move by the Fed and the US regulatories to step in and shore up confidence really did help US stocks quickly swing round. And that's the same as what we're seeing. You know, confidence, particularly in the banking industry, is extremely important. So having this sort of move to shore up capital really quickly has helped turn things around. And also we must think, you know, banks in Europe, they have a lot of exposure to Credit Suisse as well. So this could really have rippled out quite quickly across the entire banking system in Europe.
Yeah. So this week has been incredibly volatile. We saw the Silicon Valley Bank first, followed by Signature. Do you think there is more contagion? Are there going to be other problems that are exposed as a result of this? Or do you think we're going to see the start of it settling a little?
I think the problem that we have here is to do with the fact that we've seen central banks raise interest rates so rapidly in Europe, in the US. And what that means is these banks, which have a big bond portfolios, have seen the value of those portfolios tumble. And that's created a lot of concerns over liquidity. And so whilst we're still seeing central banks raising interest rates, there is going to be sort of fears that these cracks appearing in the financial sector could get bigger. So this, I don't think it's necessarily going to be the end of it. But I think what we do know is that banks are, generally speaking, in a much better position than they were going into the 2008 financial crisis. There's much more regulation surrounding the banks. They have to be much but larger capital buffers. So, you know, it's not going to be, I don't think, necessarily a repeat of 2008. But that doesn't mean that there won't be some banks, perhaps smaller banks, which could still be more vulnerable.
Yes, and it's those smaller banks, I understand, that had sort of some of the safeguards that were put in place after the 2008 crisis wound back by the Trump administration. How critical is it to put those back, to reinstate those safeguards going forward?
I think that's going to be something that's going to be looked at very closely now, because, you know, that's where the vulnerability appears to be within the financial system. So having more regulation in order to protect the consumer and to protect those banks as well, because these concerns and worries can become self-fulfilling. You know, if the consumer, the clients become worried about a bank, that's when they'll go and all withdraw the money. And that sort of creates these problems and these contagion fears. So I think there is a good chance that we will see heightened regulation following this.
Yeah. You mentioned the very aggressive interest rate hikes that have been happening everywhere, including Australia. Do you think it's going to give central banks pause, given this impact that it is having in other areas?
Yeah, I think there is definitely reason to think that central banks will be looking even more closely at what they're going to do. I mean, we've got the European Central Bank meeting today. They are actually expected to go ahead with their 50 basis point rate hike. But what happens hereafter, I think there is a good chance that we will see a pause so that they can assess the impact of these steep hikes on the broader economy.
Fiona, appreciate your time. Thank you so much.